Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, April 12th, 2024. It's 12:14 p.m. Eastern Time as I'm starting the video, so we're about halfway through the trading session, last day of the week. And what I'm going to do in this one, I've had several requests for trade idea updates and other questions on existing trades. And I've jotted down, gosh, it's got to be close to 24 trade ideas that I've recently highlighted. I'm going to go over those, and what I'm going to do is throw it out in the beginning of the video. These are in no particular order. I'm just kind of somewhere in my head. Some I pulled my my alerts log up for the last 30 days. I know I've covered quite a few of those that I've gotten price alerts on, and throughout the ones that I thought would be potential trade ideas. And so I'm going to go through in this order. I'll try to stick to this order. You know me, sometimes my brain will go tangentially if I'm talking about one thing and it's related to another. But I'll try to stick to that. That way, what you can do in the video is skip ahead. It's very easy when you're on YouTube video, even on the site, you can drag the little scroll bar, the fast forward, and you can see the charts. If you drag it slowly, click and hold on your mouse button and move forward. I should have had a video queued up. I would have showed you how to do it, but down on the bottom, and you just and then you can see the charts. And most of the charting platforms I'm using will show the ticker symbol. So therefore you can see what I'm covering, and then you can jump forward to a trade that you might be interested in, skip the ones you're not. Okay, here's the order I'm going to go through, and again, in no particular order. EATZ, that's the restaurant ETF, sector ETF. PEJ, that's the leisure sector ETF. VIX, volatility, I got to post out to you on that today. I won't spend a lot of time there. DJP, that's a commodity ETF, and I'm going to add right here DBA on there as well, because that's the other one that's ag. UNG, or natural gas, the gold mining stocks, the euro, Intel, XRT, which are retail stocks, TJX, which I just covered the other day, TMUS, that's T-Mobile, AJG, Arthur Gallagher, Airbnb, which is ABNB, AMP, AGO, IWP, that's the Russell 2000 Growth Index. So it's similar to the IWM, which we have a short trade on, but that one's concentrated on the growth stocks within. IWM is just simply the broad-based Russell 2000. They have a growth version and a value stock version as well. Wheat, corn, DBA, that's the, oh yeah, I mentioned DBA already. That's the general commodity ETF or ETN. IBB, the biotechs, SOXX, semis, SMCI, one of my favorite semi shorts, XHB, home builders, Bitcoin, and that should do it. So let's just dive in. This is QQQ. This is that key level, corresponds with a 433 level on QQQ, NQ futures. I just figured I'd do an update chart. I've been covering, because I get a lot of folks every time I post the future, not every time, but once in a while, folks say, hey, can you give me the ETF version? So I am acutely aware not everybody trades futures, so I like to trade and watch them both. Levels, there's that downtrend line yesterday, which we ran into. And at the time I said, most here, just based on the comments, and look, guys, I started general. I know there's probably some quiet voices out there that may see things the way I see them. The vocal voices are quick to say do the opposite. It was that comment today, but that's it. And like I said, I want to say this and not come across offensive. I actually have encouraged, it reinforces my outlook on the charts, the technicals, and the fundamentals. When I hear that, I've seen such a level of capitulation lately. You have to have that to get the big moves. I'm not looking, right now we have some intermediate targets on the daily chart. I'm calling the Qs back to the 200-day moving averages, about a 10% or so drop. But that is just initial. I think there's a potential for a whole lot more, a major top, and a drop in the coming years that's measured 50% or more in the indexes. So, but we'll see. First things first, and I've been saying it forever, and that's just it just frustrates me that, look, unless we break 433 and we break 1800 on NQ right here, none of that is, doesn't really, the odds will go up. The odds are favorable now. That's what I've been talking about. It's my job is to share what I think is going to happen, why I think it's going to happen, but then most importantly, what's going to trigger it, and that's still waiting a break there. So, that's a check mark, keeps the downtrend intact. I had, a lot of false comments lately. Someone said, well, we're in an uptrend. Again, define the time frame. I'm not, right now, this to me is the most important time frame. It's a near-term downtrend, and that's that. So let me move on. Just want to show you here. I've marked up some new levels on this NQ 60-minute chart. This is a support zone. You can see it was support here, it was support here. I do a zone when there's two lines in close proximity. That zone runs from about 18,238 down to about 18,206. And because you have several reactions in there. You can see the yellow lines. That's the most important thing. That's the big trading range I've been talking about forever and a day. We shorted the top of, covered the bottom of, or you may have or may not have, and I still expect a downside break and then a much bigger move. But we need to break it. And so what needs to happen? Well, today, here we are. We're at support. We got rejected at resistance yesterday. And we need to now take out today's lows and open the door for a move down to the bottom of the range. I've suspected the last time we got there would be the time it broke. We got one more hurrah off it, and let's see if we get it. It'll probably come on a gap down on Monday would be my guess if we're going to get it. Like I said, everything that I'm seeing, more and more evidence building, guys. I don't care about, I do care, and I watched a handful of beloved overweighted stocks holding the market up, namely NVIDIA. Apple's now at support and some other things, and they do have to break for the market to break. But what I'm seeing is one after another sector roll over and break down. Again, I'm going to do trade ideas, but before I roll into those, let me just show you again, just to reiterate and make clear, because I covered this the other day, tech is the biggest one that needs a break to a 4. But we've already had breakdowns in just about everything else. So, I do my little check mark things, right? And the top 4 sectors in the S&P 500 are tech, which I showed you first. No check mark there, but definitely a check mark on XLY. We broke my 144.55 yellow line, which was the trading range. It's the same thing I see happening to QQQ most likely, and XLK. Breakdown backtest. That's solidly a check mark. So there's one out of the 2 top sectors. XLF, they're check, check, check. And we finally took out my 40.50 yellow level today after the breakdown of the uptrend line and bearish rising wedge. So that's 2 out of 3 of the top 4. And then the other one, XLY, we did get a check on a breakdown, a back test of that, but I also have a kind of a last stand 177.50 line. We're testing it now. So let's just say out of the top 4, I have check marks on 2 of the 4. And then next up would be industrials, and that needs to take out 122. And then after that, again, I'm going in order of market cap. XLC is just a fame. It's one of the XLK and XLC are just part of the big FANG trade, or Mag 7, or whatever you want to call it. And that's because this is almost all Google right here. One of those trade ideas I'm going to get to in a second here is TMUS, T-Mobile's in there. It's pretty good weighting. All right, let's rifle into those in the order I told you, starting with EATZ, Restaurant Sector ETF. Breakdown, I highlighted pre-breakdown, expecting it to. It's already down, 6%. Like I said the other day, I think plenty more downside left to come. I think this one's just getting going, and I see a lot of downside. Oh, I'm going to get back to those stocks, but somebody asked the other day, and I think I brought this up in a video, so just if you're interested, someone said, hey, what's your top pick? And I said, I really hate that label because people may load up on one position, but I did list some of my favorite short trades. And of course, again, saying they're contingent on sell signals on the top SPX sectors, which I just covered for you. Check, check, check. We're about halfway there, and the others are sitting right on the ledge. Formerly known as Mag 7 stocks. Again, I'll cover that and do another update. I update those all the time. And then, so some of my favorite, EATZ, the restaurant, everything I just told you, PEJ, these are all covered in the last week or so. IAI, I'm going to get to that in a second. Let me add that in here. IAI, because that's one of my favorites, very important. And small caps, Nasdaq 100, VIX futures, or ETN. Again, this was from yesterday or the day before. And then on individual, I said, individual sectors are the way to go. And then two of my top picks on stocks are SMCI and Carvana. Both it's still active shorts, and I will get to those in a second here. Let me make sure I've got SMCI in here. Hold on one second. Yeah, I do. And Carvana, do I have Carvana? I'll add that at the end because I didn't mention it before. EATC, nothing more to say. Again, I'm not, there's an initial stop, but I'm just kind of leaning towards, for the time being, tuck some of these away if we break 433 on QQQ and the rest of the sectors give way. And then I'll continue to update and add some more targets, deeper targets. PEJ, again, highlighted pre-breakdown, has now broken down, breakdown back test yesterday. I think I highlighted there, and moving lower. This is textbook, technical analysis trading. A breakdown, you miss the breakdown, you can short a back test, and now we've taken out the breakdown lows and the back test, moving lower impulsively. Beautiful setup, minimum targets right there for you. Again, covered quite a bit. All of these have been covered fairly recently. VIX, I covered that pretty detailed today. You can't get more precise than that. I've been harping on this 1878 target. That was the first target. We hit it, and I did an update there. That was the charts I got out to you today back on the April 4th or so, or somewhere in here. Went up. This is how it works, guys. This is why I list multiple targets. Each target upon the initial tag is where a reaction is likely. A reaction could either be a pullback, which this was, or consolidation. I also gave you the VIX futures. I made a reply. Somebody asked about this today. Hey, what do you like to trade? Futures for me, that's /VXX. April contracts still have plenty of volume right now, but they'll expire next week, April 17th. And so I've been starting to scale into on this pullback, layering into some of the next month, forward month, May's. When you trade those VIX ETNs, you'll see short term and midterm in the VIX ETFs. And they're telling you the short term ones are rolling the shortest contracts. Right now, they're probably in the process of rolling from the Aprils to the Mays, and then the midterms probably going into the Junes or something like that. There's not an unlimited. There's quite a few of them, so you can trade which ones you want, or just trade them with the spot VIX. This is why I said if you're trading the futures, I showed you that chart today where we reversed a hair shy of that next price target I had on VXX, the April contract or the futures, but at the very same moment, and that's why I always say, if trading NQ, I watch the charts of QQQ, because sometimes I'm going long and I'm looking for NQ to hit a certain price target, but at the same very time, just before it hits that target, even a little shy of where I was targeting, I may see QQQ run into resistance, and then I'll just say, I'm going to book profits here. I'm not going to hold out for an extra 0.2%, because the QQQ sellers may step in. So that's how that works. So I always say watch multiple charts, watch the charts of the actual index. And in this case, as I said, this is a spot VIX. Nobody can buy this or sell it. It's, all you can do is, it's just a kind of a hypothetical. It is a model-based index based on puts and call buying, but you can only buy the futures that track this, which is what I do, options on those futures, or those VIX ETNs and ETFs, which use the futures to track the VIX, but they have additional expenses and things like that, and you don't want to hold them. It's a hit and run vehicle. You can, for the most part, because you can see VIX has been moving up, but when you look at like VXX and all that, they just rot, So, but when they move, man, they're if you can get in and time them, there's a 37% move right here. Was in just 3 days, went up 50%. So you have to have a pretty good degree of confidence on a drop in the market, and you want to also coincide. There's another great example. Like, why go long VIX if QQQ pulls back to 433? Because that's support. Wait for that support to break, and then the VIX should rocket. And I think the VIX certainly. I think everything's kind of lining up for maybe a big drop, almost a crash-like thing next week. But again, if those levels break, and maybe they come next week, maybe they don't. Maybe we hit 433 again. I've said this over and over. Getting more and more vocal bulls on the site. Go long. I've said it every time we've hit 433. Buy it if you think we're going to new highs and beyond. Buy it if we get there again. Buy it. I just showed you support right now on the futures, and that's that same support zone. Buy that. Or as a short seller, you want to wait for a breakdown and then wait for that'll take us down to 433 again, bottom of the range, and then hopefully down through next week is what it appears. Now that the financials, everything, like I said, it's just more check marks. All right, to the rest now. DJP, broad-based commodity, ETN, highlighted last time as a objective long here. It's 29.32 support and or breakout above the trend line. And so while the stock market's been going nowhere for the past this same period, really since mid-February or so, this has been nothing but net, going straight up in DJP. And, it's not a runaway rocket trade. Remember, this is a broadly diversified commodity and then I also gave you an ETF variant of it, DJ. Gosh, I'm forgetting the name, but you can revisit that. I don't want to. I'd have to dig it up. It's and then I gave you also a pure play on the ag commodities, which have just been ripping. And this, again, this is stuff I look at. People stare blindly at waiting for the CPI to come out. I don't do that. I watch commodity prices. I watch home prices and try to extrapolate. I can see that the home price index, isn't moving, but I see days on market in the big markets. I don't watch Topeka. I watch Miami, Tampa. I'm from Florida. I watch Houston. I watch the hot markets, the big markets. I watch some of the markets in California, statewide, and all that. There's some great resources out there, and I'm seeing days on market. I'm seeing price drops, other metrics going to pre-COVID levels now. I don't see that being talked about. And one thing I know about the housing market from experience is prices it's not like the stock market sometimes where you have a strong up and then all of a sudden just crash. Typically prices, which they have been level out first. And then so prices hold for a while and then you'll notice the days on market going up and more inventory, which I'm also seeing hitting the market. And then once people realize nothing's moving, you start to see the price drops. That's the trend I'm seeing so far. Guys, whatever. Nothing's changed for almost a year now. I see a perfect storm and it's just building. And again, timing is everything if you're going to be positioning as a trend or swing trader or anything like that. And that's, like I said, I've given you the levels and not just on the markets, but on the top sectors, the S&P, on the treasury bonds, on crude oil, and all those come together. And all right, natural gas update, UNG, we were looking at that on the 60-minute chart. Breakout, we were long here, hit T1, pulled back to, this was S1, the first R1 resistance, then it became support, objective long entry there. We're at it again. We're on all intents and purposes. I have the level at 1485, we're at 1476. PPO is starting to curl back up, so I still like it. And just like the stock market, it's in, but in reverse, natural gas has been in a longer term, intermediate term downtrend, but a near term uptrend. Yeah, we violated there, but let me pull futures. And so it's either way, we're still in very close proximity and we're off the lows. And remember, we're coming off a big divergent low. And although it's not shown here, I've shown it before, we're down towards the low end of the range, multi-decade low end of the range. Natural gas is about as cheap as it's gotten in decades, or as cheap as it gets. And so therefore, is it going to zero? No. Could it go down more? Sure. And you don't want to get married to it. But again, so from an RR perspective, and that's how I frame everything, it still looks good, and it's also a way to diversify. There it is. There's my futures. So we had the trend line. It goes to the left of the chart here. We had the minor trend line. We got in here right off this divergent low, rallied up. That was all called MSS, minor support zone. We hit it. We had a little divergent high, pulled back. Then we back tested the trend line and we moved up. And so far we're still at that level. We're above the initial entry if you haven't been active trading it. And yeah, ideally it shouldn't go much lower. You can set stops at break-even entry if you want, or give it a little more room. Like I said, it's up to you. How do you want to put it? Are you putting this in as a hedge in a diversified portfolio, or are you actively trading it? Okay, somebody asked about GDX today. Here we go. So they asked me, I think the question was put to me, do we have divergences on the daily? Something's gone on here funky. Oh, here we go. Let me change that back to a daily. There we go. There's my lines. The question was, do we have divergence? No, we don't have on the daily. We don't. But what we have, we're coming up. Here's a level I've had here forever and a day. This is created back in 2020. This is that previous reaction high here, but it's not just that. You have that. That's a major reaction high there. You had a lot of reactions there underneath once you broke it. You had some reactions here. So it's a significant level. We're coming up on it. And there's that downtrend line we still haven't broke. Remember on the 60-minute chart I gave you, so there's an uptrend line. We take that out. That should bring in more selling. Remember, we were long off the lows. Milked it halfway up, started shorting too early, admittedly, but still probably equaling the gain from the trade when T4 was hit and we closed it out there. But we're coming up on major resistance now, and what I pointed out in that chart, it's in the comment section. I circled here. What I'm doing right now is circling every extreme, what I call extreme overbought reading. Overbought is when you hit 70 on the RSI. So extreme, that's the red line, is anything above that. And I'm circling without leaving anything out, all those extreme overbought readings. And you can see what happened. This one was, yeah, this one did go above it. Yep, let me, I missed that. There it is, that one. And so what I said in my reply there, it's about 50-50. Sometimes you hit it. Now look, you always had at least initial pullback, but then you went up to make a marginal, meaning a slightly higher high with negative divergence, meaning the indicator made a lower high. But just circling those extreme overboughts, you can see, and that was the last one there, that one there. This is what happens. So sometimes it's one and done, like this right here. There was one right there, and you can see the big drop. And sometimes you hit it, you have an initial drop, and then another thrust up, you put in a divergent high. So just like I said, the RR is abysmal right now, and you could try to take another short. Now we do have the divergences still, believe it or not, on the 60. There they are right there. That was a divergent high right there. You can see we started having divergence here and we kept going up. Like I always say, divergence isn't a sell signal. There's that trend line we're still above right now. And so I've recapped. These are the initial targets for the short pullback trade. Remember, we already closed the long out here. And now you can call these targets. S1 means first support. S2 is a second support trend line. S3 is a third support. And then if we get a deeper correction, it would be those initial targets from that other trade, which by most folks probably stopped out. But if not, then like I said, we've just gotten a little hot this trade. And if my market analysis is right, again, it's call me a fool, because it's a fool's errand to call for a market crash. They're so extremely rare. It's one thing to even call for, you get your head bit off trying to call for corrections in a bull trend, but to call for a crash, meaning a very swift, like a 10% move in a week or two, and that's what I think the odds are considerably higher right now. Okay, I just say that. And again, if we break 433 today or next week, then it's probably going to come. And where I'm going with that are two things. Number one is that gold, GDX is the gold miners ETF. It means it holds gold mining stocks, not gold. And I've seen times where gold, it's rare, but I've seen times where gold's rallying in a bear market and the miners are going down because they're stocks and they're getting sold down by the algos and humans, even if gold's getting a flight to safety bid. So it is possible to see that trade happen. And the other thing too is, gold lately has been somewhat correlated with the stock market. A lot of money moving in. And I know from looking at the charts and doing this a long time, when the stock market's at all-time highs or multi-year highs, and bullishness is extreme, which it is right now. I can show you the sentiment indicators. Maybe if there's time left in the video at the end, I'll show you that. Then what happens is your margin interest is at or near record or multi-year highs as well. What does that mean? Well, margin interest is when you have a margin account, you're borrowing money, you got 100 grand, your broker lets you buy 400 grand of stocks, even more in futures. And so it tends to be when you get these euphoric rallies and things like this, and everybody's bullish, as evidenced by a lot of the comments on the site lately. And again, the indicator, you can pull the AAII, look at any of them. They're at my nosebleed levels where corrections come from. Most folks own that NVIDIA they have. It's been doing so well, so they keep buying more on margin, gold and all that. So I think it'll be kind of a broad-based, if and when, again, we get those breaks of the next big levels I'm looking for, then you could see kind of almost everything with a ticker going down. Maybe treasury bonds might go up as a flight to safety, and that would be what I would expect. But other than that, there wouldn't be a lot, and even gold and silver might get sold down and finally backtest those breakouts they had, and then give us objective re-entry for a longer term trade. So there's that's GDX, your update, and gold is gold. There's same thing in gold. I can just extend the divergence, still divergent high. It's backtesting. Remember, we broke this trend line. I thought that might do the trick. And all we did is went in and back tested it and kept the divergence there. And so this is still a likely pullback target if you're looking to get long gold. I'm sorry, I tried to pull an arrow tool, but down, keep clicking on it. It's keeping me on the circle tool. So down to that trend line, there's a, near-term uptrend line. And if things get ugly, then, we can come all the way back here to the breakout. And that was where we broke out. All right, there's your update on the miners. Oh, by the way, yeah, not too crazy because the euro looks like it's going to bounce. Euro got the snot knocked out of it. Remember, we were here and I told you the day I put that GDX short out that I didn't have strong convictions on it because the euro looked bullish. I had this bullish falling wedge. Right after I posted that in the comment section below that initial post, it broke out and it rallied. And I did an update along the way. I said, look, guys, yeah, it rallied. I could see that coming, good chance, but here's where we're probably going to stop. I gave you several resistance levels, and the last update I did was right here. Sure enough, that did the trick. That was rejected off the downtrend line right there. Then we went on to break the bearish rising wedge, and now here we've come full circle. That's a big drop in the euro. Positive divergence. We'll probably get a bounce here. That could give the stock market some relief. Remember, the euro means euro down, dollar up. Dollar up usually coincides with the stock market going down. Stock market, kind of like gold, likes a falling dollar. Why? Well, when the dollar's going down, it makes gold go up because it takes more dollars to buy an ounce of gold. Same thing with a share of stock. It's so there's the correlations there, but it's on and off. It's not a constant. There are times it disconnects. So be careful solely trading that. You could take a euro long right now, maybe as a hedge against equity shorts. That's one option there for you. Or, and FXE is a euro ETF, or you short the dollar. That's UDN is the inverse dollar ETF, or ETN, or you just trade E7, the euro futures, or DX, the dollar futures, long or short. What's next? Intel. Yeah, let me give you an update on Intel, the good, bad, ugly. I told you I wasn't crazy about this one, and it just went right on through. Look at that. There's a good example. So it said max stop would be the trend line there, and we went below it, and that level. This thing just kept going, and it kind of shows what's happening. And this is what I think could happen, by the way, guys, and I've said this, to the equity markets. I keep talking about a pullback to the 200s. The algos tend to come in and buy, humans buy. I wouldn't be shocked to see us, if things all continue to fall into place. What I mean by that, I see more sectors and key sectors, the important ones. Again, basic materials, energy, those are sectors in the S&P 500, but they've been going up. So that's not bullish right now. In an inflationary environment, 99 times out of 100 for the past half century, that has been bullish. It's helped to support the S&P 500 when basic materials go up in a non-inflationary environment. It shows that the economy's strong. That means companies are, cement and bricks and nails and lumber, things like that are being bought because things are being built. But at this point in time, it's no wonder we're kind of in a whole catch-22 thing for the economy. So in other words, right now, like I said, I view energy and basic materials going up as being net negative because that's inflationary, and this market is all about the interest rates. Okay, so there's Intel, and it kind of shows what's going on in the semis, and it kind of shows, the former crowd favorite can just go and slice through one level after another like it's not even there. So again, for those of you that might share my mindset, and I'm just getting ahead of this, because if it happens, if and when it happens, I've been talking about it for quite a while, it's going to happen fast. And unfortunately, you feel free to ask me questions. Like somebody asked about the VIX today. That train hasn't completely left the station, but I really don't like chasing, a 15-18% move. Not even that, it's up more than that, even since I've been highlighting it recently. So VIX has been climbing. It gets to the point, and the VIX can suddenly fall very fast. So I like getting in, strategically and tactically. And then again, like I said earlier, you can add on pullbacks, but you don't want to start buying it up here. Everyone's going to want to buy it up here. Everyone's going to want to short stocks. Those that don't want to short and only want to buy and say the market's they're going to want to start shorting about right here. And again, we may bounce off the 200s, but this is, like I said, this is where I like to get short in advance. Scaling in here, we had multiple entries here. Average cost is about here. With that kind of all-in moment, I told you the other day I'm anticipating it, so I'm pretty aggressively short already. But I've always got dry powder to add. Especially when you're trading futures, are so leveraged, and the beauty of that leverage. And I don't recommend it for everybody, but it allows you to take whatever your number is on your portfolio, 10, well, you got to have a certain amount to, even get a margin count, but you have 100,000, you can be net short the stock market by 200, 300, 400, 500,000 in futures, 5 times your portfolio amount, but then you can be offsetting it with hedges and other things, because that's one of the uses I like with leverage. So you can take, have treasury bonds and commodities and other things in there, and then be trading $1 million worth of securities, or net again, due to the leverage factor in those, but yet with only $100,000, and it's almost suicide if you're doing it all short market or all long natural gas, or all long gold. That's just financial suicide. Me, I talk about the benefits of diversification, especially if you're going to leverage up like that. Use that leverage judiciously, and then make sure you have some offsetting positions and diversification in there. All right, that's Intel. No bueno, doesn't look good. XRT. Mentioned this one the other day, and mentioned it and really liking it because you had, just like the biotechs, a beautiful trading range, pop, breakout. And this is what I see in the stock market. A breakout to new highs, brings everybody in, gets the bulls all giddy. We're going up to here. Nope, it failed. Bearish rising wedge breakdown, and it's just nothing but red sticks so far. We're down about 10% off that failed breakout right there. Let me see, I'm going to keep in the order I told you. I'll get to the biotechs in a second, but all right, let's go. So in covering this the other day, I gave you TJ Maxx. So that was a component of the retail sector, and told you it was an objective short on the trend line break there, big red candle, and then an add-on or confirmation on a break of this level here, and that's it. So it's nothing big so far, but it's going my way. 200-day plus 91.43 support. Possibly the first stop, probably, unless there's some type of crash-like scenario coming up. Game of bounce. If it bounces, then you re-short if you are an active trader, or maybe you only have a partial position, or you book profits there. You can re-enter on a kickback to 95.60. Don't wait for 95.61. You want to short a little shy of that, because all eyes are going to see it. And then, and again, it's in a vacuum. That's how I trade it. If you said I can only watch TJX, but I'll be watching the stock market, I'll be watching treasuries, crude, XRT, the retail sector, I'll be watching Walmart, everything else. That's how I would trade this one particular stock. And then, if I get my more powerful longer term sell signals, I just go out to the weekly chart. And this says, I can either go and hit a couple singles like I just showed you, the short term targets, the 200-day movement, or go for the fences. Because this is where I have a high degree of confidence TJ Maxx is going down here to 86.50, and then the trend line, and then if and when that primary trend line goes, which probably will within the next year or two, ultimately probably a lot more downside in this one. TMUS, I had a price alert on that not too long ago, been tracking that one. That's not it. TMUS is T-Mobile. Nice setup. I think I probably shared this with you recently. Look at that divergent high, beautiful support, 159.42. Set a price alert. I think I already have one, probably do, because I had an alert fire off recently. But there it is. First target 150, 380, 200-day moving averages there. If and when they go, again, and I'll turn my focus to the weekly charts. Here's a long-term uptrend line on the weekly that has the potential to be taken out, and then this stock probably come all the way down to 100. So you're looking at a, whatever, big drop there. AJG, I covered during a video the other day because I had a price alert on it. Told you breakdown, it was right there. So far, so good. Nothing but red stick since. Breakdown's confirmed. Same targets I covered before. And that's Arthur J. Gallagher. And then I covered in the same video, I was just looking at my alerts list, Airbnb, which is ABNB. It's flirting with that trend line. Look at that. I remember the day I covered it, I believe we were just below, but not close enough. I always say if you have to squint, give it the benefit of the doubt. And so far, we're just hugging the trend line. But again, it depends. If the market breaks down next week or next month, this one will probably break down. I'm going to put a line here, guys. This is the level now. So if you wanted a level right under the recent low, see all these reactions from above and then a reaction from below there. and that's about 158.59. Set an alert. When that goes, that should open the door, and this one's probably coming back also to the 200s, maybe more, probably more. AMP, I covered this one the other day too, just had broken down, beautiful little short setup. Ameriprise Financial, headed down, coming up on my first target now, but I still, I think this one's coming down to at least that 360 level there. Let me make sure I have IAI in here. I don't, and it's related, so I got to get to that now. IAI is one of my favorites. That was in that post I made, or the comment the other day. Taking out that 111.30 level now. When I covered it, I gave you this measured target. There's the bearish rising wedge breakdown. That's this line, your divergence line right here, and the primary uptrend line right here. These two form the wedge. There's the breakdown, back test, and that was the target I gave you. So this one's got quite a bit more downside to go. And that is, again, it's an ETF, so you have everything in all of the broker dealers, and you don't have to worry about earnings because we are in earnings season. Remember, the financials tend to come first. That's what we saw today. AGO I covered recently is a short trade idea as well. That's it. Breakdown, beautiful breakdown right there. That's not the tool I wanted. Breakdown right there. Nothing but red sticks so far. One little tiny green candle was flat close right there, and then it took out, since I last updated it, first took out the 86 support. Now it's taken out that 81 support and headed to that preferred target right there, which is the uptrend line and the 200 days. So you've got another 7% or so downside left before we get a decent reaction, or if you want to game a bounce. I covered IWP because I was doing a video and the alert went off. That's the growth. It's IWM's version of the, just the growth stocks within the Russell 2000. No, I'm sorry, mid-cap growth. I said that wrong. Earlier I said, yeah, they do have a small cap growth version. This is the mid-cap, and so mid-cap growth index. And right here, I'd say that was a level. Yeah, that was support. This one's starting to crack, and again, I'm just kind of updating it and saying it. I think it has some potential there, just like IWM, of course. And MDY is your main. This is the MDY is the main mid-cap ETF that has both growth and value, all mid-cap stocks. And that one, I'm going to tweak this line a little bit down because we had this reaction low. That's what you need to take out. We're just starting to crack. So this is the trading range. It already broke down, so it's on a sell signal. It took out the 50 today, and there's going down. IWM, probably since I'm on the mid cap, should cover IWM. Remember, my yellow line's at 199.70 and has been. That's the important, very important support to me, and that's just starting to give way now. If we can sell into the close, it's not even 1 o'clock yet. The market rallies, it's going to keep us guessing. It's going to keep me guessing until next week. If QQQ parks, solidly above 433, and IWM parks on or close enough to 199.70, but that's the level I want to see go to open the door to the next move down in the small caps. But so far, it's just been textbook. Beautiful bearish rising wedge, breakdown, back test, rejection. And it's been in this trading range now, just like QQQ, and it needs to break that. And I believe it will. And then there's a whole lot more downside. This is my next target. Remember, this is all just even though I've been in and out, these were my bear market targets before anyone even knew there was a bear market coming back in 2021, early 22. I gave you these 3 targets. We hit that 3rd target, went sideways for a while, back tested that trading range. And now we should be on the way to my next target, all the way down here, which is the primary uptrend line off the 2009 lows. Comes in with the COVID lows right there, and also very good price support right there. See, IWM likes these little trading ranges. It gets in these trading ranges, and then sometimes you get whipsaws. You got a whipsaw to the downside, but then the real deal. And then here you had a whipsaw to the upside, and then you broke to the downside, went another range, and then this bigger range, and so. And that's probably the next step. Alrighty, gotta pick it up here to get through all these. We're almost done. Got wheat. Haven't updated in a little while. It's kind of just hanging in there, not doing much, not going up much, not going down, but the analysis has been spot on. R1, we broke the primary trend line, hit R1, and as I've been saying, I continue to maintain, we need to, R1 means resistance, first resistance. Resistance is resistance until unless broken. I expect it will get broken. So what you have here, it's an objective re-entry or long entry here. You've got a little bit of an uptrend line that might be slightly violated, but you also, that's the half empty view. You also have a perfect back test of the uptrend line. Now the problem with back testing, you can continue to back test. There are no guarantees that after back testing you're going to go up. So I usually like to see a big green candle to show you that we rallied off there after back testing. Just set, depending on where you're at. And again, this is just both a swing trade as well as a trend trade, as well as a diversification trade. Again, this is wheat. I made the case on the longer term charts. I'm not going to do it here. This is just an update on that current trade and showing you its back testing. And then I think I already have it, but if not, set a price alert above 551. And that should take us up to the first target here, $6 roughly, T2, T3, T4 right there. All right. Corn tends to move with wheat. Corn also needs to take out the downtrend line right there, resistance. And when it does, boom, 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 boom. And then you have a more significant longer term trend line there as well. And corn and wheat, again, tend to move together. I think I already covered DBA. Yes, I did. That's the Aggie. Getting a little hot here, guys. It's probably due to cocoa. I'm still short cocoa. I'm holding on to that one for a while. It's not going down, but it's not going up anymore. Momentum is stalled, and it's probably contributing quite a bit to this. So here's the bottom line. I wouldn't buy it here. I'd wait for a pullback at this point. It's kind of like gold and silver. Wait for a pullback. Probably get one soon. No guarantees. And if you're in it, and you're a long-term trader investor, I still maintain longer-term bullish views on DBA as I do on gold, silver, commodities. I believe we're in an inflationary environment with more to come, and therefore commodities still have a much more favorable outlook and RR risk-reward profile than does the stock market. Next up, IBB. Okay, I covered XRT. Retail stocks, and I used the analogy in the recent video to XBB. Somebody had asked me a couple of weeks back about the biotechs, and I said, here it is. Actually, a couple months, I said, look, probably go and make a breakout. It'll be a failed breakout. If we do, we'll have a divergent high and fail, and that's what happened. You had it was a breakout there. It didn't last long. We're back in the range, and the MOs typically, especially after a failed breakout, you're going back, maybe not straight down, possibly, but that's the next stop, bottom of the range. That's IBB, one of several biotech ETFs. There's LAB. I don't know if LABD is a biotech bear. It's 3 times leverage, so keep that in mind. Or you just short IBB or XBI or any of the other ones. Stocks I mentioned, still hanging in there. We got to kill NVIDIA. When they kill the beast, then the semis will roll over and they will go down hard. And that's still my 3 targets from the current trade. We had a bearish engulfing candle back here. It's still very, very much intact. Just like the Nasdaq 100, because semis are tech, we've been moving sideways and we pretty much need to break that range. Let me give you it's pretty much here because we had one little whipsaw down through there right here. But you can see, look at all these reactions. So, about 217, about where we are, about today's 218. Again, this is where we're just right there where we just need that extra bump in a few of those sectors that haven't broke down yet, and QQQ and NVIDIA, and pretty much most of them, they'll probably follow suit. All right, SMCI, one of my favorite semis. Again, it's profitable. Shorted it first here and added here. The breakdown there, it doesn't look like it's going anywhere. I mean, it's still, again, a profitable trade by about 14%, but needs to take out 811.46, then 690, and I kept this one very simple. I gave just one sole price target that I have a pretty high degree of confidence will be hit. However, like anything, don't get married to it. You got a little downtrend here, price resistance there. If QQQ pops the top of the trading range, especially if it's anything more than just a brief pop and a failure, and NVIDIA holds up, yeah, this guy's just following NVIDIA. It's NVIDIA's sidekick. It's Robin to NVIDIA's Batman, and except it's probably going to fall a lot harder if and when NVIDIA breaks. And you guys know the level. I've covered it so many times lately. 840 needs to go first, then 742, and then lights out when that purple uptrend line, which comes all the way back off the October lows, goes. Alrighty, XHB, I threw out Home Builders as one of my favorites recently. Beautiful bearish rising wedge pattern. I know, lots of those, just like you had here, and just like we shorted here last year, swung them down, and that's the same thing. So we already hit my first target, 103.21 today. Again, I have little desire to game a reaction there. I'll probably, if we can break down, the key levels I went over before on the market leaders and QQQ and IWM, then we should continue on down to that 97.38 in short order, and then 91. There's your 200-day moving averages. And at this point in time, let's say max target 85. So if hit, that's going to be from the breakdown. If we get to 85, that's about a 21% drop in the builders. Bitcoin. I'm going to go to spot Bitcoin here. Crypto. I've been highlighting this trend line. This one, I think, is just on the verge. It'll go down with the market, I believe. Really looking like a nice short setup. Needs a takeout. Pretty much, you can see the level here. It's 60. I have it at 68. I'll call it 68,800. Nice price support. Why is it? Well, reactions from above. Then we broke out. We successfully backtested. Went up, backtested again, successfully backtested again, successfully, and then broke it. Support once broken becomes resistance, right? Then we broke it. Then it was support, 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 and then we broke it. So we're dancing on it. We're above it now, and you have dual. The only thing I like better when there's a well-defined support level in which to short once it breaks is when there's intersecting or dual support levels, and that's what we have here. So there's my sole target right now. If that breaks, 60,720, that would be a drop of about 12%. You can use GBTC or any of those new Bitcoin ETFs. And that's also, I think, a crowded trade, meaning if my call is right and we start to get a panic type selling, waterfall selling in the markets anytime soon, whether it's now or 3 months from now, guys, then I think you're going to see, I know the mindset of the trader. The people buying Bitcoin are a lot of the same people buying NVIDIA and all that, and they're probably having a margin, especially those new ETFs. Then what happens? The market drops, they get margin calls. The broker says, you sell it or we'll sell it for you. And that's what happens. And then selling begets more selling. And that's where they don't happen a lot. When we get those big moves, I can, in a month, make, half the profits or more for a year trading those moves successfully because they happen so fast. I'm going to give you another target, by the way. Here it is right here. Yeah, there's a nice target, initial target for Bitcoin, 64,500 right there. All right, and then I told you I would update Carvana. I put it at the end of the list. That was one of my top picks before. It's been a short trade for a while. We shorted it back here. We hit the first target, went up, continued to build, and we shorted after a divergent high. The divergence only got bigger. Then we broke this trend line. We're back right to that first target right there. And that's 74.40. It's a very significant level. It's been containing all pullbacks since that first target was hit. And when it breaks, it should be a quick move down to my next target, T2, T3, T4. From the entry, we never went higher to violate a nice 2-to-1 or 3-to-1 RR based to that final target. And I very well may extend those targets as I've covered based on this. This is the nature of this beast. First of all, the fundamentals are awful in this company. Car dealerships are having problems I've been reading about. These are the drops this thing has, and I covered this the other day for you. And so I will most likely continue to ride that one down based on this weekly chart to some of these deeper targets. And so the potential profit, is another 70-80% downside if you're willing to ride out the counter trend bounces, or as an active trader willing to, game them, and then you can turn if I'm right, an 80% drop into 150% plus return. That's what swing trading is all about, trying to game the squiggles, I call them. The counter trend bounces off the initial tags of support. Okay, just under the 50-minute mark, but I threw out got 24 trade ideas plus some market analysis and other things. So that should be it for the week. If I see anything else that stands out, I'll let you know. But that's it for now. This has been Randy Finney with Right Side of the Chart. If I don't do another one today, have a great weekend.